Hello, fellow traders. 'Tis I, the Rumpled One. It's Tuesday, March the 26th. The year's 2019. Let's talk trading. How to trade like a pro. Do not take it personally. Don't internalize what happens when you trade. In other words, if you lose, don't feel bad. Don't take it personally. Don't get mad at the market. You do any of those things, and it's just going to turn out worse the next time. Because there's no benefit in it. There's really nothing to take personally. You've got your plan, you've got your money and risk management, you've got your method or your indicator. And so don't take personally what happens because the market doesn't know you. And most of all, don't take it personally when somebody, especially on the internet, criticizes you or hates on you, pokes fun at you, or any of that. I mean, the internet makes it easy for some people to be big and bold. But if you ever saw them face to face, they wouldn't say it. They hide behind the keyboard and the screen. So you can't take any of that personally. I mean, if you trace through my history and just in the trading forums, oh man, you can see how much I get dumped on and still do. I mean, you always see some little snarky, snide comment come through on YouTube from, now and then. I mean, I could delete them, but no, that's, I don't think that's playing fair, to tell you the truth. But the main thing is that you don't take anything that happens about your trading personally. And one of the reasons you don't have to take it personally is you have money and risk management. You know how much you're willing to lose on any particular trade. And so that's usually the worst thing that can happen to you. Nothing to take personal. So let's move on to the charts. As you can see, the euro yen is moving towards that weekly midpoint that I mentioned earlier. You can see we only have two unfilled gaps so far. The weekly open gap. And so there was a nice trade out of that lower weekly wick zone. That reminded me, there was somebody asked about the wick zones and if they do fibs. Yeah, I think it was 2017. I wrote the TRO wick zones indicator, and that was one of the TRO 27 wick zones, and you can actually have fibs for the wicks. For some people, they come in handy. Okay, we're still below the yearly open, still below the monthly open, but above the daily and weekly open. Now, interesting to note, here's the opening range for the week. That first day, you can see we popped out at once, twice. So once again, using this as a breakout trade or just as a crossover can, bag you some pips. We're still below the opening day range for the month. And we can see that again right here. And you can see what ranges we are inside of. And the inside bars, I've had a couple people tell me that they like, the way I'm showing these inside bars and that they never thought about it this way and how it's they're seeing that there's profit to be had off of this. Now, please note, inside bar yesterday on the euro yen, and it already broke out once. And here's the weekly inside bar high. You see, do you see this price action right here? This is key. Failure, failure. It broke through, came back, didn't close above. Broke through, came back, didn't close above. Broke through to a new high, still didn't close above. Broke through, came back, and died. So you got 2 attempts to break, 4 attempts, or 3 attempts here to close over. It was just telling you that, you know what, it's time to give it up. So once again, you can use these as breakout trades, or you can just use it as a crossover trade. Either one. Once again, we broke out of yesterday's high, hit the 125.00 and came back. Only 60 pips of range. You can see here, dollar yen moved away. Oh, that reminds me, there was another screen I was thinking about showing you guys. But the only reason I didn't do it is because then you're going to want to know about the indicator, and it's not about the indicator. You should pay attention to the swap rates, especially if you hold overnight. So if you hold the dollar yen overnight, you get paid. If you're long, if you're short, you pay. Just something to think about. Small amounts, but small amounts add up. And if you were dealing with millions of dollars, you'd be talking about tens of thousands. And as you can see how the pairs are rotating strength. Now we put in a weekly highest open right here. Here's the daily H1 lowest open. Here's the weekly H1 lowest open. And here's the monthly H1 lowest open. So you can see, once again, there was a nice short opportunity. It failed right there at the H1 highest open from the holo trades. Okay, we had the pivot point inside the buy zone. So once again, no bias. We're above the weekly open. See above the daily open. Long trigger once, another long trigger, some pro trades in here. And as you can see, there was profit to be made. Buy zone in effect, or I'm sorry, the rat zone in effect. Red rats got some here, red rats got some more here. Pivot, we missed that pivot. You can see here, once again, we missed the pivot. So we have one missed pivot this month. Remember, it knocked out all the other missed pivots. And so the ones we are now looking at are the couple of the ones from last year. No, these are the ones from last year. And these are the ones from back in January. Oh, and just for those who always want to know, these are the indicators, and they're in the TRO build 1000 zip file or the motherload file. And it looks like I need to plug my computer in. There we go. I was running on battery power. Price action. Here we go. Let's see, one at the bottom, green at the line, profit. 3 at the top, red at the line, profit. 1 at the bottom, green at the line, pro trade, profit. Wick zone. Came in, went out, came in, went out, came in. Let's see, does it come out? Once again, trading crossover trades, just trading with the H1 candle color at the line. And for those of you just tuning in, these purple diamonds are the mid dots. It's the previous candle's midpoint. Some rules of thumb. You want to be long above and short below. If the candle opens below, look to short. Open above, look to long. So right here, you'd look to short, but it crossed over, so you go long. So the midpoint or mid dots, that's the crossover point. Those are for crossover trades. And as far as the tick chart goes, you can see we just moved up about 3 or 4 ticks. A nice trade using the Einstein line. And for those of you just tuning in, the Einstein line is when you turn on your computer, if you load up my little indicator here, TRO Einstein, it says price. You're looking at price relative to when you started. So is it up or is it down from when you started? So obviously right here, price is up. So this is about a spread distance here. So price moves about the spread. You can just take it and maybe you profit, maybe you don't. It's up to the market, not up to you. Because once again, the reason you enter the trade has no bearing on the outcome of the trade. It's just something that's hard for most traders to really adapt, really get it. Because they want to think that their system, their indicator, their EA or something is just somehow going to go in there and make things happen. And unfortunately, that's not always the case, because if it was, there wouldn't be a market. So maybe it's fortunate that it's not the case. But just looking at the charts, you can see the price action of what's going on here. Now, somebody asked me a question. I can't remember if it was about the rat zone. Well, they were asking me what time frame was, but I already answered that. What was the best time frame? And the answer is it doesn't matter. It's time frame independent. In fact, I saw somebody else on a forum asking about what time frame to use, and I still don't understand why people think they're trading time. They're trading price. In fact, I can't remember. I think I wrote an indicator. I called it like the thermometer. And so instead of having all these bars, it was just up and down. I mean, it was like a thermometer. You're just taking a reading of price. Because, see, when you start breaking it out this way, it looks like it's two-dimensional, you know. But actually, it's just, pretty much one-dimensional, up and down. That's price, up and down like a thermometer. But that's not, it's not taught that way. It's usually taught to put some squigglies on here, put some indicator down here that has more squigglies, or paint a bunch of geographic figures on here, like triangles and trapezoids and octagons and whatever. Oh, some of the things people come up with is just too funny. I mean, I equate it to reading tea leaves, using the I Ching, and throwing the sacrificing. But anyway, fellow traders, you know what? It's not what you trade, it's how you trade it. So go out there and drain the banks.